So good morning traders. So in this part I'll be talking about the trend. So the trend, this is just basically the direction of the market. When you're trading forex, the thing what you're trying to do you're just trying to predict the direction of the market, whether it's going up or going down. That's all. So the trend is a very important aspect of trading, as it shows us in whether the market is going down or going up. So we have mainly three types of trends. We have what we call an uptrend, a downtrend, and a consolidation. So an uptrend or a bullish trend, this can be defined as when the market is making higher highs. Just bear with me with the drawings. When the market is making higher highs and higher lows. So an uptrend may look something like this. So an uptrend may look something like this. Just bear with me in the drawings. Okay. So this is just a basic example of an uptrend, where the market is making here. Market is making higher highs. Delete that. Market is making higher highs and higher lows. So when the market it is moving, doesn't move in a straight line. It makes what we call highs or lows. So a high, this is just the highest point. So this is just the highest point of the market before it changes direction. So in this case, when the market sorry about that. Yeah. So in this case, when the market it came up to here, before coming down here, it first made this high. So this is the highest point before the market came down. So a high, this is just a point where the market reaches before it comes back down. So that point is what we call a high because it's the highest point. Now, when it comes down, before it goes up, it will make what is called as a low. So when the market was coming down, it reached this point where it made a low and then went up, and again made a high, came back, made a low, went up, made a high, made a low. It's going to get when it made a high, came back here, made a low, made a high, made a low, again made a high. So when the market is going out, then it makes a high, it makes a low, then it makes a high which is higher than this high here, down here. So this high becomes a higher high because it's higher than this high. When it comes back down, it makes a low which is higher than this low. This what I'm calling as a higher low because this low here it's higher than this low there. So that's what you call a higher low, and then that fashion continues. So this will continue. So we will continue to call this an uptrend until the market makes bear with me on that. So we continue to call this an uptrend until the market makes a low which is lower than this low here. So the market makes a low which is lower than this low, and then makes a high lower than that high, then we can expect that the market, just bear with me the drawings, so you can say the market will maybe start coming down. So when they see the market, so when it will start, when it will make a low, so this low, it is lower than this low, and this high, it is higher than that high. Then we can see that the market has now changed direction. So just quickly delete this. So that's just basically an uptrend. So the downtrend is just quite the opposite of an uptrend. So the downtrend, this is a bearish trend, or when the market is going down. So a downtrend is going to look something like this. A downtrend is going to look something like this. Just bear with me with the drawings. So a downtrend will look something like the downtrend may look something like this. Now on the uptrend, I said the market was making higher highs and higher lows, but this won't be the case with the downtrend. So in a downtrend, just the opposite is just happening, where the market makes here a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, the lower low here. So when the market is making such a structure, then you can say it is in a downtrend, because it's making lower lows and lower highs. So this again, it will turn into an uptrend that will be broken. The trend will be broken when the market fails to make a lower low. When the market doesn't, let's say the market is coming back down, when the market doesn't make a lower low, but it goes up and makes a high which is higher than this high, and then it will continue. It may continue in that direction. So it may look something like this. So this is when the market is coming down. It's making it's made a high, lower a low, a lower high, lower low, lower high, lower low, lower high, lower low. It makes a lower high because this high was lower than this one. But when it came to make a lower low, it failed to make a low which was lower than this low. And the market went from here and made the high which was higher than this high, which made this a higher high, and then it made a higher low there. It made a higher high, higher low, and so forth, hence changing the trend. So that's how a downtrend will look like. So the last type of a trend is what we call, okay, it's not really much of a trend, but you just call it a type of a trend, but it's what we call a consolidation. So we said an uptrend, this is when the market is going up, and a downtrend is when the market is going down. But in the case where the market is neither going up or going down, this is what we call a consolidation or a range. Others may even call this an accumulation, but just call it a consolidation or a range bound market. So this happens when the market is making equal highs and equal lows. So the market is making equal highs and equal lows. It's not making higher highs or higher lows. The lows and the highs are equal. So this happens when the market here, it has made a low, it goes, makes a high. When coming back to make a low, it makes a low which is equal to this low, and again goes up and makes a high which is equal to this high, goes back down, makes a low equal to this low, and goes makes a high which is equal to this high, and continues in that manner until it breaks out of this range, and that turns into an uptrend where it may make something like this, and may proceed into an uptrend when it makes a high here, comes back to make a low, a higher high, a higher low, and a higher high. That's in that manner. Or it may go the other way. Just sure about that. Just bear with me on that one. Or it may go the other way round, where the market goes the other way around. Instead of going up, it may still go down because it is more of undecided. It's not going down and it's not going up, so it can go either way from this point. So from this same point, the markets can still come down here, make a low, go back, make a high, which is lower than that high, and may make a lower low, a lower high, a lower low, a lower high, a lower low, the lower high, just like that in this same manner there, making it into a downtrend. So that's how the trend will look like. So now let me now show you how a trend will look like on a real chart. So let me just maybe go to the left so that we can see better part of the chart. Okay, so so what you're looking at here, this is I can see this is an example of a downtrend, because the market is coming down there. It is bearish. It is going down. In this case, you don't really need to you don't really need to start looking at high lows or high highs to see that the market is coming down. But if you can't if you have not yet trained your eyes to see a trend, you can still use the same method. I can see the market here. It is making here. It's made the market here. On that one. So the market here it is making here. It made the market here. It's made this was the highest point of the market. The market here made the low. It went up a bit. It went up a bit up to here. Made the high. Again came back. Went up to here. Made the lower low. Again here made the a lower high. Again made the lower low there. Again made the lower high. Market here made the lower high. Then again it came back down, made the lower low. Made the lower low there. Until the market made the higher low, but failed to make a lower low here. Instead, it's made equal lows, and from here, the market went up and made the higher high, which broke this trend here, as you can see. So when the market is, so in this example, the market was coming down. It was in a downtrend. So downtrend, this is where the market is just coming down. The example of an uptrend, you can use this same example here. So this was an uptrend. You're seeing that the market is going up. So you can clearly see that the market in this case was going up. You can see the market made the push up. It made the high. The market came back and made the low. The market here made the low here. So this low was higher than this low. It made the higher low. And then the market again went up and made a higher high there, until the market now failed to make. So the market here made the higher high, and again it made a higher low, this low which was lower than this low. But then at this point the market failed to make a higher high, failed to make a high which was higher than this high, therefore breaking this trend, and then it went down and became a downtrend. Yeah, but so that's it. So for a range market, for a market which is consolidating or ranging, you can see that this is an example of a ranging market, like this part where the market was just going up or going down. So just this part in the box. So this is a ranging market because the market is not going up or going down. You see the market come here, market came to this point, bounced from that point, and again the market see the market came here, bounced, came down, bounced, came again this point, again bounced, and again it went up, bounced until it broke down and became a downtrend there. Just look for another example. So this is an uptrend where the market makes a high, it makes a low, makes a higher high, higher low, higher high, higher low, higher high, until and again it makes a higher low until it fails to make a higher high to make this to continue the trend. And then this market now can expect that it will change into a downtrend as the market continues. It makes it came down here from a high, it made a low, a lower high, a lower low, lower high. It didn't make a lower low here, and it went up. It turns into an uptrend, just like that. So that's how just the trend works. So this was I think this it's a better example of a consolidation where the market, you can see the market, you can see the market ranging between 2 points. So you can see the market come down here, it goes, bounces from this level, comes back here, goes back up, comes back here. It is not making a trend, it is just between two points or two ranges. That's why it is just ranging between 2 points of the market. So the market is not making higher highs or higher lows, it's making equal highs and equal lows. So there are other ways of looking at a trend. You can either use what we call as price action, like what I was using right now, using identifying higher highs and higher lows, or you can use indicators, or you can use objects to identify that. So basically, how you're going to use indicators to see the trend, you can use what you call the moving average indicator. So a moving average indicator, this is it's a kind of a special indicator. This indicator can be used either as a single indicator, or you can use or you can use 2 indicators of the same kind, or you can even use 3 indicators. You can use as many indicators as you want, but don't really encourage that much of the usage of indicators because they are a bit lagging, as in they are a bit slow to show the price. So you can use either price action, whether you use the usage of just looking at higher highs and higher lows, or lower lows and lower highs, or you can draw a trend line. So a trend line is just that to show you the trend. So if I drew a trend line, it is going to show me, like if I draw a trend line from here up to I think somewhere there. So this trend line showing me that the market is currently in an uptrend where the market goes up, makes a high, it makes a low there, it makes a higher high, a lower high, a higher high there, a lower high, until the market breaks the trend line and then goes into a downtrend. So that's how you can use the trend line to identify the trend. You just draw the trend line. If it's an uptrend, the trend line must touch on the lows of the candles, and if it's an uptrend, if it's a downtrend, the trend line must pass through the highs of the candles. Okay. So if let's say, for example, if you're using an indicator to see the trend here, if you are using an indicator, it may look something like this. indicator may look something like this. So just look like a line, and they look something like this. So this is how a moving average indicator may look like. So it will just look like a line. So if you are using, for example, a moving average indicator, when the price is above the indicator, then that's an uptrend. Just as simple as that. If the price is below the indicator, then that's a downtrend. Just as simple as all that. So maybe find an example of a downtrend. That's what I'm talking about. So see that small downtrend which was there. So if you're using a trend line, you just draw the trend line from the highs there up to the lows, and you see that the market here, it was in a downtrend, right? It came here. So once the market is bouncing off the trend line, then it is trending like that. So it bounced here, so it made the high there, it came down, made the low, made the a lower high, didn't make a lower low, and it broke through the trend line and started going up again. Okay, that's as simple as all that. If you are using an indicator, it may look something like this. Just look something like just like this. And when it broke through, so now just change direction, starts going that way. So in this case, you can see, so when the market was in a downtrend, the indicator was above, and when the market changed to an uptrend, the indicator now became below the price there. Yeah. So for the consolidation, the indicators don't really respect consolidation. Like the indicators which you should use in a consolidation, these are oscillators. I'll talk more of that in the later videos. I just wanted you to see how the trend will operate and how you can read the trend. So if you have any questions on that, you can just leave message below, and I will reply to you. So I think that's it. For this video.